When refinancing your mortgage, loan qualification will depend on credit score, debt-to-income ratio, and equity. An FHA loan, for example, typically has more relaxed criteria than a conventional loan. First of all, your credit score is crucial. It measures your credit management history. There are some basic ways that you can improve your score that can make a really big difference. Debt-to-income ratio is the percentage of your income that goes toward paying debts. A high DTI can be a red flag that there's an increased chance of default. Finally, home equity is your ownership stake in your home. It's the value of your home minus your current loan. Different loans require different levels of equity. For example, if you're just lowering your rate, you'll need less equity than if you're doing a cash out refi. Understanding these criteria will set the foundation for a successful refinance.